Good morning, Wall Street winners. It is Thursday, February the 6th. And as we take a look at the Bloomberg app and the futures, the NASDAQ has just gone into the green. It's basically even. It's up 1 point. The Dow Jones and S&P are both up heading into or in the pre-market. We're still an hour and a little bit out from the start. So 8:21 Eastern time, an hour, 9 minutes away from the open. Looks like it should be an interesting day today. I'm not sure how it's going to play out, to be honest. Looking at the news headlines here in Bloomberg, it's really just about what is going on in the administration and what's going on in other countries with respect to tariffs. So there's definitely been a great deal of disruption and volatility created this week. If we take a look at the Yahoo Finance app and just scroll across the top to begin with. Oil is still in the 70s, 71.41. So it's up this morning and in the green, but it is down at probably its lowest level in the last 2 weeks. Moving over further, you can see that the Nasdaq has now gone from 1 to 6. So it's again, it's up. It was up and then it came down. It's recovering now. The VIX has come down to under 16, which is a positive, although hard to believe based on the amount of volatility. And then we go through the shares, and we've got just Costco updated its sales outlook for 2025, increased its forecast, and has just taken off. I mean, this stock has gone up $100 a share in a week, and or less than a week. It's up again in the pre-market today. Lulu had an off day yesterday, but has been recovering from the 379 range a couple weeks ago up into the 412, 413 range these days or this week. You've got Walmart that has broken through 100 and continues to be strong. I am just skeptical if we because we still have tariffs looming now as of March 1st. And with that uncertainty, to see how those could really impact the retailers, I think the retailers are going to be one of the hardest hit. And so I think they're popping now, and maybe they'll continue to move forward into their earnings, and earnings will drive the share price. But after that, when the realization of the negative impact of tariffs begins to be realized by more and more people, because a lot of people are still very ignorant as to how this is going to affect them. And the way it's being explained by the White House is completely incorrect and unfactual. It's not based on fact. So we just have to wait and see how that plays out. And when it hits the consumers' wallets and pocketbooks, that's when they'll start to finally understand what is meant by a tariff. We look down to transports, and we still have some positive momentum there. Going into oil, it was a mix of green and red on the screen, but mostly red yesterday. It looks like it's going to be mostly green today based on where we are in the pre-market numbers right now. Um, and again, it's a sector that I have a holding in, but I'm staying away from a day-to-day perspective. My focus has been almost exclusively on technology lately, with one exception. I did buy a new stock. I haven't added it to my portfolio yet. It's going to be down in finance, but it's called Apollo Global Management, or APO, and it's a large private equity fund. They do a lot with private credit. They had good earnings, but they got hit and the stock went down. And I bought on the dip, and it started to rebound. I think it has a lot of potential this year in the private credit space. And they've just announced yesterday, actually, a big partnership or are going to be proceeding with a partnership with some regional banks to try to provide a way, almost like a stock market for private credit, where the value of the private credit instruments is measured and displayed on at least a daily basis, maybe more frequently than a daily basis. So that'll be interesting if that comes about. That said, a side note, going back to tech, Texas Instruments dropped down into the 170s yesterday. That was an interesting buy, knowing that I had a feeling it was going to come back up with, as all semis seem to be making a move back upwards. Applied Materials had a good day yesterday. It's coming back. It's got earnings now in 7 days. So very interesting to watch that. We had some earnings last night. I'll get into that on another semi. Micron had a good day yesterday. You've got CrowdStrike, which with its peers, Palo Alto and Cloudflare, all in that cybersecurity space, have been doing very, very well. Net is up at $144. This was a $90 stock just a month ago. This stock has just been flying. Palantir had a huge day with earnings the day before last, and then it pulled back slightly off that. Apple came off yesterday. It's down again this morning. Um, Looking at some big movers, CRM yesterday. CRM was down around 341 for a while. If you take a look at the chart, 342, and then it popped back up into the 347s. I think this is an interesting buy at 343. I think this is definitely going to get back into the 350s and possibly higher as we get closer to their earnings. It also has less exposure to tariffs, so I like that from most of these technology stocks. Microsoft is still hovering down in the 413 range. ARM had some phenomenal earnings yesterday, beating on their revenue and their earnings. And it was a significant beat, but they guided conservatively. They didn't guide lower. They guided conservatively because their CEO saying they've only really been a public company for 6 quarters. And with what's going on in the market and DeepSeek and all these other things and spending around AI, they're just saying that, I think we're going to do very well, but uh, we're going to post our future forecast numbers in a more conservative range than a more aggressive range. And totally entitled to do that, but the market didn't like it. So the market beat them up a bit, and they are down $8 in the pre-market. I think they're going to recover because they have come out of a licensing battle with Qualcomm. Um, they have some great licensing and royalty revenues. This company generates their chips, and their designs for the chips are used sorry, not their chips, their designs for the chips and their proprietary design technologies are used in every AI chip manufacturer's platform, and it's also used in now a number of cell phone chips and chip design so that they can accommodate AI. So I think ARM is definitely a strong and interesting play going forward, and I bought some on the dip after earnings yesterday. So I'd encourage you to take a look at that. I think it will bounce back today. On has earnings coming up in 4 days. So this will be an interesting one to watch to see how they're doing. AMD got beat up by their earnings yesterday and are down. Um, Workday had an incredible day based on some restructuring news. I can't imagine that that's going to stick. I think that Workday is going to pull back into the high 250s, low 260s, and I would look at acquiring it again at that price point. But I think it's just a little on the steep side price wise right now. Lam Research had a good day. Looking for this stock to get into the $90, $95 range. So with all the positivity in earnings announcements, its earnings included, I would expect that to go higher. AVGO had an incredible day yesterday, and it looks like it's going to pop again today. And then we get down into Tesla, which is getting beat up primarily, I think, because, well, two things. Elon isn't loved by most people outside of America at this point. And for what he's doing in America, he's not loved by a ton of those either. And then Tesla's deliveries and his reputation, which is so closely intertwined with that company, is having a negative effect on sales. And I think we're going to see that. We saw it in the first quarter. We're going to see it, I think, in the second quarter. And if that continues throughout the year, it's really going to put some price pressure on Tesla, especially if they can't make any forward movement with their fully autonomous driving or their robo-taxi initiative. It's going to hurt them. Not saying that they can't recover going forward, but it will hurt them in the short term. Meta has been bucking the trend. Whenever tech stocks have been going down, Meta has been unaffected. It just seems so rock solid right now and kind of under the radar, which isn't a bad place to be right now with everything going on in the news media. But you do have some headwinds for Meta, for really any of the social media companies, Google, um, with the EU potentially looking at tariffs and penalties for large American tech companies if Donald Trump moves forward with tariffs against the EU. So that'll be something to keep an eye on. Nvidia had a great day yesterday. It's finally starting to recover. I have to anticipate that Nvidia is going to continue its move upwards into the mid 130s. Um, uh, that is my prediction for the next, call it 6 weeks, as we get until the middle of March when we start to hear from Nvidia. We're going to hear from Nvidia on February 26th. So by, let's call it the end of February, I believe they're going to have extremely strong earnings, just like ARM did, and revenue. They may guide down slightly in their guidance, but I think they're going to make a statement before earnings to help put the market at ease on that perspective. And then we've got Google. Google's been just slammed, great earnings and profitability when you compare it year over year. But they missed on a few revenue metrics and market share metrics around cloud, and they got hammered. And I think it's an amazing opportunity to get into Google right now at a deep discount because they're definitely a market leader. And then TSM, again, a manufacturer of these semiconductor chips, doing very well. This was a 220 plus dollar stock a couple weeks ago until the DeepSeek announcement, and then it fell like most of the other semis. It started to recover. I think it's going to get back up into the 220-ish, maybe 230 range. Certainly 230, 240 with its next set of earnings, which should be very strong coming out in the second quarter. But I think you've still got a little bit of room for upside in TSM. Now we go down into the financials, which all had a really good day yesterday. But again, it's kind of a sector overall I feel is a little overpriced, with one exception, and that is APO. I'm going to add it right now to my portfolio, and I'm going to put it into finance or banking. And this is a stock that I believe has a lot of room for upside. Um, they are doing some pretty interesting things, innovative things in the private credit space. And they've had a great track record. I mean, you can see it at times. This stock has definitely taken a bit of a hit, 125 to 99, so 25 foot dollar drop. But then it's recovered, and here you've got a 140 to 163, so a $23 pop there, and it's not in I'd say it's not overpriced. It's not cheap by any means. If you look at the multiple on this, we're looking at 22 times, which is on the higher side. I'd be looking for something in the mid-teens, but I think there's a lot of value here, and this is one that I think has, again, some room to recover after its earnings report. You can see that it fell down into the 161 range. Now it's back up into the call it 166, the high 165s. I think it's got room to get back up into the 174s, and then depending on earnings next quarter and other announcements to potentially go further. So that's where we are today on February 6th, Thursday. I hope you're liking the videos. And if you are, I'd encourage you to subscribe to the channel so you're notified when they come out. Try to put one of these out every day before market open. And then I'll record some shorts typically throughout the day on different topics or different stocks that I'm looking at that day so that you can look at those if that's of interest to you. If you'd like me to cover anything, I'd be happy to do that as well. Good luck in your trades, and we'll talk.